All right. How are we doing, everyone out there? It is February 18th, 2024, and we have another live XRP markets report for you guys here today. Always a happening in the markets 24/7, 365 in the information age. We got a lot to cover in this episode, so I'm going to try to stick to it, stay focused, and try to keep my rants sweet and short for you guys. And we'll see how quickly we can get through all of this information. It's a big, massive Sunday session. You guys know we stack it up deep on a Sunday. So much to cover as we look at the week ahead. And we're also going to provide additional insight from David Schwartz himself on defining what programmatic sales are. Obviously, we had a couple videos that really got a lot of excitement this last week, and that's talking about letting XRP breathe, because people forget, they miss, and they don't understand what we're talking about with programmatic sales, and this gets confusing, and then we get spin cycles spun up by the fudsters. And so we dropped another video yesterday titled Programmatic Sales, Ripple has stopped programmatic sales, and that was a direct quote from David Schwartz. And as I alluded to, we're going to talk more on that later in this episode to break down and provide clarity for our community so that we can take effective action. And putting this education to work is what we've always been preaching here. It's one thing to understand the grand conspiracy. It's another thing to get on the right side of the transfer of wealth that's already underway. The transfer of wealth's already started. We're not waiting for XRP to 589. XRP is just one part of our plan and our program, and we continue to show up every single day to provide you guys the insights, how to decode the data, break it down, and then relate it back to your own investment thesis, your business decisions, and how you are going to take your family through to the other side of this chaos. Let's get right on into it, folks. By starting out, we're going to take a look at our markets. I appreciate everyone for stopping by and smashing that thumbs up if you appreciate our content, and please make sure to share this one out far and wide. Let's get it going. So we did get the run up to about 52.8. 52.8 is where we went up to, and that was on Thursday. Okay, we cool back off here. Bitcoin comes back down to about the 50,600 level, and we see it cooling off here at a 51.6 price to finish off the week. And we'll be starting a new weekly candle here shortly. Haven't started it yet, but Ethereum is at 2,800, and XRP's back down to 55 cents. After pumping all the way up to nearly 58. So we almost got that 0.589. That's not the 589 that we're all waiting for, but it's almost the 589 we got this last week. A little bit of excitement, love to see it, and the cryptocurrency market remains incredibly strong. When we, take a look at this thing, you can see the stock market up, crypto up, everyone predicting that the Fed is going to achieve this soft landing, everything's going to be fine, and that the deficit the United States government is running is no problem. The national debt that we have of 34 trillion, no problem. The 125 trillion plus of unfunded liabilities, no problem. The hundreds of the hundreds of trillions and quadrillions worth of toxic derivatives exposure, not a problem. The hundreds of billions of unrealized losses on the bonds for the banks, not a problem. The trillions of dollars worth of real estate that has to be reset in the next 24 months, not a problem. The yield curve inversion that matches up perfectly identically with the 1929 Great Depression crash, not a problem. And I could list off another 100 data points that leave us with the fintech bros, the crypto bros, the pump it bros, the perma bulls with the blinders on, just steering us right into this thing like it'll never end. And this is the same sentiment that we see time and time again during these market opportunities. And so we're not going to leave all of our capital on the sidelines, because you never know how far these bubbles are going to get blown up. You never know how, it's tough to predict how long the fiat currencies are going to last. But this is what we believe to be near the end, and we're on the point on the runway where it's a logarithmic decay, where it's slowly and then all of a sudden. And if you get caught off guard, you're dead, metaphorically speaking, or maybe even literally. As we see internal chaos, we see external chaos. The current events have been keeping us busy, haven't they? Check it out, folks. Let's get it started here with Mario Nafal. 12-hour news recap. Trump sells $400 golden sneakers. I did see that the highest price he commanded for one of them was $40,000. I don't know if that was a special signed one or what the deal was with that, but selling gold sneakers. And this was in Philadelphia, I believe, which is interesting because this is right after Trump just got banned from running any businesses for the next 3 years. Or is that a permanent ban? We'll get into that more here in the next clip. But we also get all the rest of this. Deadly airborne virus spreading in Australia. We have a little march that took place in Nashville with what looked to be some agents, some nefarious little characters. Very unfortunate to see. Iran plans to transfer its advanced anti-air systems to the Syrian and Lebanese border in another escalation in the Middle East. Protests in Israel get violent. Of course, there's a lot of tension out here. Tyson Fury fleeing the UK to avoid taxes. I'll tell you about a program that hasn't been working out, and that would be the UK program over there with Tyson Fury calling them out and showing them how ridiculous it is. Migrant riot breaks out at The Hague. Absolutely crazy. And then we have a shooting in Bayshore, New York. I'm sure that we had a few more the activities live these days in the streets, in the cities of America. It is wild out there. And then we have VP Kamala saying that Putin is a bad, bad man. I don't know why that is part of the news cycle, but Mario Nafal put it in here. I guess this is her response after Putin and Tucker went viral. Then we have George Santos suing Jimmy Kimmel. Okay, whatever. And then we have thousands protesting in Islamabad despite restrictions and arrests. And then we have Russia takes key strategic points in Avdiivka. That is over in Ukraine, a city that has now been seized by the Russians. We'll continue to update you guys on that one. In regards to the Russia-Ukraine situation, I've been finding the rhetoric out of RFK to be very interesting, to say the least. Some of the stuff that he talks about, I don't dare even mention here. But in this episode, I'm going to just show you guys some of his most recent comments that I thought was really shocking, because I continue to bring this back to, I don't care what program you want to fund. I don't care what war you want to fund. I don't care where you think we should send money. We don't have any money to send. We are bankrupt and bust. And we can't keep kicking down the can down the road unless you don't care about our children. If you want to just sell out our children's future, then okay. Sure, then this is the program that you would implement. Keep on inflating and destroying away the value, destroying the middle class and any opportunity in this country. Meanwhile, you fund wars, excursions here, programs there, this, there, and you guys already know the deal. But what RFK said here is interesting. He says, even if the Ukraine war ends today, we will still spend $500 billion rebuilding the country. The contracts to rebuild it are even bigger than the war contracts. Mitch McConnell was asked in March if we could afford $113 billion for Ukraine. He said, don't worry, it's not really going to Ukraine. It's going to U.S. military contractors. I guess that makes it okay. If it's good for American business, then let's fire it up, huh? What do you say? It's all just a money laundering scheme. This is a direct quote. Raytheon, General Dynamics, Boeing, and Lockheed, BlackRock owns them all. This is what he says. And what he's alluding to is, yeah, we've sent over, over $100 billion now. They just passed another $95 billion, I believe, was the most recent one the Senate passed. And they're looking to send money to Ukraine, Israel, Gaza, and another country as well. And what do we get back home? Well, we get inflation back home. We get the destruction of our value back home. We get the destruction of our way of life back home. And one would ask, is this being done by design? Are they purposely trying to set this country off? It's incredible. But to his point, we've sent $100 billion. That's nothing compared to what we're going to spend rebuilding it. And so this is where we continue to see that logarithmic decay catches folks off guard. They don't understand that we're losing all respect on the world stage, but we're also losing not just our world, our respect when it comes to the military conflicts, and we're actually getting checkmated in a couple spots. Let me be very clear. I support our troops through and through. I just think it's unfortunate what our military, God bless them, has been used for. And no matter what you want to use them for, as I said, we got checks that we can't cut. We got checks that need to be cut, but they can't be cashed. And once again, there's no stopping this agenda. There's no consideration being made in D.C. They just continue to push forward. Another $95 billion is the most recent one. We'll continue to watch it. And by the way, I will continue to stack real money on considering what is taking place right now, I will continue to stack my silver. I will continue to stack my XRP and other currencies and other, alternative investments that can hedge me against what I see as the destruction of the US dollar ultimately. And we're doing it to ourselves. Now, the destruction of business and opportunity is being seen on display here in New York. As we just see here, Trump says that Biden is doing a, quote, witch hunt against his political opponent, like in third world countries, banana republic style. I'm not going to play this clip here, but this is Trump after he has been barred from running businesses in New York, this most recent ruling. Not only was he now fined, I think, over $300 million, but now they've barred him from running any, operating any businesses in New York. Now, it's interesting because I prepared this live show and to make this presentation. And at this point in the show, I was going to make a statement on this. I want to make sure everyone understands I'm not here to get political. I'm concerned about the money. Where's the money at? Where's the money going to go? How can I get in front of that? How can I benefit from that? And how can I protect what little money I have? Because if the program's happening over in New York, then it might happen in a few other states as well. And the point that I was going to make in regards to this was this is just like what the United States has done by weaponizing the US dollar, by freezing the Russian assets. Countries besides Russia are now seeing that and they say, wow, if we get on the wrong side of this deal, our assets can be frozen and we're going to be out of luck. And so they're already starting to sell off our bonds. They're already starting to stop using our dollar. Now, the same thing is going to happen at the state level as New York embarrasses itself in, its quote unquote judicial system on display here. It's an absolute joke. But nonetheless, as I said, they're going to continue to press forward with their agenda. They don't care about getting caught. They don't care about being out in the open. And they're so desperate to push this thing through that you see they're not backing down in any sort of way. But I think this is going to have major backfire, major blowback. And this is going to start to lead to exactly what I can share with you guys now here. I found this right before I fired up this episode. What we have here is a George Washington law professor says, quote, it's one of the greatest ironies of this case. In the name of protecting businesses in New York, you probably just led to hundreds of businesses looking at potential rentals in Florida because they look and they go, wow, if we fall on the wrong side of the politics in New York, they could sell us off for spare parts. Exactly what I've been saying, right? It's the same thing taking place on the world stage with the US dollar. Everybody's ditching the dollar. Everybody's ditching our bonds. And this is what we're now seeing at the state level. And we've already seen it with the mass exodus out of states like California and others. New York's another one, where the refugees going to Arizona, going to Idaho, going to Florida. That's already started. This only accelerates it. And if the other states are stupid enough to do the same thing, it's going to backfire in a massive way. And folks, this isn't political, by the way. That's what's so important to understand. This is about protecting your wealth and understanding that what's legal, moral, and ethical swings in the wind, depending on which jurisdiction you're in, depending on what state you're in, depending on what country you're in. In some places, there's a different standard of what's legal, moral, and ethical. And I think that the level of wealth destruction that's taking place definitely is immoral. And the laws that are being passed are definitely illegal. They go against state constitutions, like states like Washington passing an income tax. Illegal for our state constitution. So this is what we have to keep in mind as we build out our businesses and as we, place our assets. This is what we're already having to start to do, myself included, is look, where can I park assets and entities to protect it from taxes legally and to protect it from states that are getting a little crazy here, trying to get you every which way. And they see millions of people leaving their states. They don't back down. They just continue with the agenda. Continuing on, trucking employment collapse has been a precursor to recession since 1991. As I was saying, we see so many data points here that confirm we're in a moment in time where we're right before a correction occurs. Is it going to be a Great Depression? Is it going to be an 87 Black Monday market crash? Is it going to be a dot-com bubble crash? Is it going to be a great financial crisis crash? Well, that's the fun part, is we get to find out. It's going to be somewhere in the middle. Is this time different? Yes. By some metrics, I would argue it's worse. The level of debt that we're now at is a lot worse. The GDP to debt is a lot worse. We've never been in a situation like this. And what you're seeing right now, trucking employment is falling. And this is a warning for all recessions that we've had since 1991. So you have real economic data points like this that show you where we're at in the cycle. Most people oblivious to this, they're not looking for data points like this, you know. And speaking of the truckers, right, these truckers are now talking about how they're going to stop delivering to New York to protest what just happened against Trump. Now, I'm not here to argue, pick a side, support this, support that. The reality of the situation on the ground is, can you feed your family? Can you keep the lights on? What are you prepped for? What are you not prepped for? Okay, because we don't know what you're going to get hit with. You might be a good person in New York, just trying to live the American dream, and you get caught up in a supply chain issue like this because this ordeal we're talking about. Then I'm not trying to bash the trucker. I'm not bashing the truckers at all. In fact, I understand. You know, operating in some of these states is completely backwards. I don't know why anybody would want to operate a small business or any sort of business in some of these states. It's completely backwards. I don't know why some people would want to live in some of these states, and in particular, the cities. Once again, when you travel across America, a lot of people outside looking in just look at our cities and they think that America is New York, Miami, and LA. And that's America, right? That's it. We have, even if you just step a couple hours outside of these cities, you get into what I call real America, the heartland, right? Where there's a little bit of common sense. There's a little bit of respect. There is some values. It's not complete degeneracy. And you can shake a man or a woman's hand and you know that they're going to try to do you right 9 times out of 10. But folks, this is what we've been talking about, is we don't know whether the hurricane's coming through, whether the bomb's going to go off, whether the cyber attack's going to occur. Oh, wait, all of that stuff's already happening. And now we have the threat of truckers not even going to deliver to New York. And talk about one of the worst cities to be in when crap hits the fan. You guys already know the deal there. I guess I got ahead of myself. That was the next article that I was talking about. Truckers are reportedly in talks to refuse delivering loads. And this is after Trump's $350 million fine. We'll continue to watch it, folks. Now, coming up on this week ahead, this is going to be very interesting to see because on Wednesday, February 21st, we do get the FOMC minutes. That's going to be important. That's coming out on 2 o'clock Eastern, Wednesday. And then on Wednesday after close, we'll get NVIDIA, and we have some other big names that are going to be reporting this week as well. So a lot of good earnings data going to be coming out. And then we're also going to get to see a little bit more insight from the Federal Reserve and where they're at in their decision making on interest rates and on their balance sheet as well. You know, respectively, they have been technically quantitative tightening by reducing their balance sheet, but they've gone from a $9 trillion balance sheet, almost 10 trillion, down to about an 8 trillion. So relatively speaking, yeah, they've shaved some, but they're still there, and they still are holding a massive bag to backstop this whole system, along with the Treasury in tandem is set to do one of the largest bond offerings. I think that's going to be coming up here in March or April. I have that data point ready to go for another show, and I'll speak more on that later. But this is where we're at in the cycle, guys, is that the data on the ground shows us that it's breaking, that the debt crisis is here, the liquidity crisis is spreading, the contagion is spreading, right? And the only response that they have is to open up Powell's Pandora's box once again, come in with a complete backstop on any banks that are systemically important, while sacrificing the banks that aren't systemically important, that would be small and regional, and by sacrificing the little guy or gal who's just trying to live the American dream. You have to understand that this is being done by design, right? To get right to the point, this is part of the plan to, you know, transfer the wealth from the middle class and the poor, what little they have, up to the rich. And this divides us in a way that, you know, is even runs almost as deep as other methods of dividing the population. But you combine it all together, and this is where you have a falling empire. And those that aren't positioned for this are going to get completely left behind. What we've put a focus on is digital currencies and, you know, crypto is what it's often called. But we look at the broader digital asset space, and you're talking about tokenization, NFTs that represent real world assets. We're talking about using the DLT technology for cross-border payments and removing friction. And the important piece to understand is that for me, I've always seen there's a big discrepancy between those that think that the law doesn't matter when it comes to crypto. And that's a fatal mistake for many. Now, this includes people that obviously are just downright scammers and fraudsters. This is the type that Gary Gensler refers to. There are bad actors. It just same thing in every sector in industry, right? Of course, there's some bad actors. And yeah, I would argue that crypto has a lot more than the average industry or sector. It's brand new and it's a relatively easy to entry. But what we're seeing now is even folks that are just trying to build out a little project, they've mostly dismissed the legislation that's being considered and what's been happening in the courts. We're finally starting to see it break out here in the courts. We've had major defeats of the SEC, which have been good. We are pushing back against the SEC in the United States, but we also are seeing right now a conversation that was happening in Congress last week where they're coming in to tighten up on Tether. And they specifically mentioned Tether, and they've just been basically exposed for the fraud that they are. And remember, this is from the New York Attorney General going all the way back to their settlement in 2021. But now it's coming back up in that Dell Tech, I think is the name. I have it ready to go. I'm going to share it in another episode. But this clip right here speaks on this congressional hearing that just took place and where other regulators think that things stand out right now. And we're talking about right here, Carol House tells the Congress that Bitcoin miners should enforce OFAC sanctions at the network level. This is a direct, some would call it an attack on the miners, but it's, direct contact with the miners and requirements and laws that she suggests are already on the books. And so they are coming, and I think that you're about to see the divide between the people who were taking the law seriously, had chief legal officers, had whole legal teams, were consulting and making sure that they were following the law versus those that just thought that it was the wild, wild west and let's see what we can get away with was kind of the mentality of most that I've seen in the cryptocurrency space. Listen in on this one, folks.
Ultimately focusing exclusively on and off ramps is insufficient in the long term, especially as the vision of this space is to move more and more into decentralization. And as you get more acceptance in exchange for goods and services, you can't rely on those on and off ramps anymore. The vision here demands that we have a vision to be able to focus regulation beyond there as the risk profile changes. So in the DeFi report that you mentioned, we highlighted lots of different types of technical features and compliance controls that can be built in at different layers of the ecosystem that could focus, for example, at the network layer where miners exist. A good place to start might be something like sanctions. OFAC has already stated in their compliance guidance that miners may already have sanction screening obligations. So a good place to start right now before imposing new AML obligations on miners or those who exist at the network layer could be to enforce the existing obligations when they validate transfers going to sanctioned actors like Lazarus Group.
So they can stretch out their tentacles when we're talking about the sanctions, right? And their policing of that. And this is where it looks like we're going to get stablecoin legislation first. This is the thing I've been saying about Tether. If they have the reserves, great. Let's see it. A third-party audit that can be respected and that is legitimate would be awesome. If they could just provide that, that'd be great, but they won't. They have little shady, little Cayman Island auditors provide it. It's silly business. Let's see a legitimate one. And you've seen Circle now step into that type of transparency, and Circle, I believe, is now updating their reserves transparency every 24 hours, I believe. You guys can let me know in the comments down below if they've changed. But as we've been saying, the space is about to get the regulations, and then we're about to get set free. And those that took the time to actually, have a legal understanding of where their projects were going to lie are going to be winning the most. Ripple just so happens to have industry-leading clarity because the SEC came after them first, and now they're going to set precedent on how you can sell XRP to institutions, right? And what's so interesting about the lawsuit as where we're at right now, Judge Torres lumped all of the ODL sales and the institutional sales into one category of investment contract securities offerings. She didn't divide between the ODL contracts and just sales to institutional buyers. But what we now get to find out in the remedy phase of this lawsuit is the ODL contracts, because Ripple changed the ODL contracts in 2020 based off of the lawsuit. This is why they've continued selling XRP exclusively to on-demand liquidity institutional partners, because they changed their contracts in a way that I'm assuming they feel safe and comfortable is not an investment contract. And so it's going to be very interesting to see if the judge rules that, okay, those contracts, the way that you've structured them, worded them, the verbiage, everything that goes into this, that's not an investment contract. You're clear, you're good to go. If that's the case, Ripple has full green light on how to sell to institutions without it being an investment contract. And I'm not a lawyer, but my simple understanding would just be, as long as there's no expectations of profit, right? As long as there's no expectations or stipulations, it's basically a straightforward transaction. You give us currency, we give you XRP. That's the end of the deal. It's just like a secondary. It's just like a secondary market sale, except it's going to an institutional buyer. But whether the sale is going to a secondary market or an institutional buyer, that fact doesn't change, right? You're selling an asset that's not a security in and of itself. It was the contracts, the way that they were worded with stipulations, lockup periods, and we can assume some other expectations in there. That's what was the investment contract. XRP's never an investment contract securities offering. It was packaged up in a contract sold to institutions and on-demand liquidity partners, which all are institutions, that the judge ruled was a security, not the XRP. But now we get to find this clarity, right? As we now know the XRP in and of itself is not a security. That means it's either a commodity or a currency. I would argue it's both. And then we move on to see how can Ripple distribute this XRP effectively. We know that programmatic sales were not ruled a security. We'll talk more about the programmatic sales that have stopped later in this episode, and they've only been selling exclusively to on-demand liquidity institutional partners. More on that later. Let's continue on here, folks. This is great to see. We want regulations. We want to clean this thing up. I guess I did pull up this one in regards to Tether. This one's from Bitfinex. How many times did I tell everyone that the business model for the Tether fraud was, one, the first part was print tethers out of thin air. 2, manipulate cryptocurrency prices. 3, make profitable trades liquidating margin trading. All of these exchanges have your trades. They are trading against you. This is why you're always getting liquidated when you use your big leverage, because they don't have to move the market far when you're levered up 50x and 100x to liquidate your butt. Especially, it's easy when they got your trades and they get to print their own money to bet against you. Print tethers out of thin air, manipulate cryptocurrency prices, make profitable trades, liquidating margin trading, take profits from liquidating traders, and pretend the money was always there. Look like I was right on the effing money. It's not Tether Truther, it's Tether Facts. A pump and dump fraud, money laundering, bank fraud, terrorism financing, sanctions evasion, as we were just talking about in the last clip. Quite literally the largest financial fraud in history. Now, I retweeted this out and I asked the question, what's the bigger fraud? The Tether fraud or the ETHgate fraud? Now, we also have the FTX fraud, but Tether would would likely be a lot bigger than FTX, which was about 30 billion, I believe. Now, ETHgate, you got to consider you have Ethereum, but then you have all of the ERC20 tokens. How big is that fraud, right? But then next in the running would be Tether, right? So we have Tether, we have ETHgate, FTX already blew up and is come and gone. But we talked about this for the last couple years, is that how closely FTX was tied in with Tether, and how Sam Bankman-Fried, he is one of these market maker magicians is what I call them. And basically they have all your trades at FTX and they have all the funny money. And what came out here in this document is that they were getting short-term loans in Tether up to the tune of billions of dollars to bet against you. And this is what CZ and Sam Bankman-Fried and this level of echelon in the crypto space were doing against each other. And who ended up winning, right? CZ was able to take down Sam Bankman-Fried, and that exposed a whole can of worms there, didn't it? And then CZ ended up going down as well because they're all doing the same thing. It's all manipulation. And so, as he says here, without Tether, there would have been no FTX Alameda fraud. This was a big, this was where the funding was coming from to keep the party going. Along with all the people in Silicon Valley that were just cutting blank checks to FTX and Alameda and Sam Bankman, right? And along with the politicians as well, along with the teachers' pensions funds as well, right? So this is what we're talking about. Starting in 2021, Deltec, that's the name of them. Deltec granted Alameda a 3-day grace period to pay for the tethers it was buying, effectively giving the fund a short-term line of credit. According to the lawsuit, the bank didn't offer the grace period to the other customers, and a Deltec executive told the Alameda traders to keep it a secret, according to the lawsuit. This secret line of credit sometimes exceeded $2 billion. This enabled profitable trades from Alameda because Tether often traded for a tiny bit more than $1 on the market. Alameda would be issued Tether coins, which it could sell into the market before it had to pay for them, the lawsuit said. The fund did pay for them later, according to the lawsuit. Alameda could create USDT on credit through the unofficial Deltec line of credit and sell that USDT for a gain before having to fund the purchase by depositing US dollars in Tether's Deltec account, Ellison said in a declaration that was included in Friday's filing, referring to the stablecoin by its ticker symbol. Now, is that Caroline Ellison, Sam's girlfriend? That's a declaration maybe they're using as evidence. Text messages revealed in the lawsuit suggested that Tether's Devasini was friendly with Alameda's traders. They texted one another to celebrate as the stablecoin grew, first to 10 billion, then to 20 billion and 30 billion, and quibbled over who was making more money. This is one big joke to these guys. They don't care about all of the folks that got caught, with no money left in FTX, right? The whole thing blew up, and these guys thought they were going to be able to just take the money and run like a thief in the night. It's all fraud. All fraud. And you wonder why I'm not ready to put my moon suits on yet, with my moon boots and my space suit, and I'm not ready to go to the moon yet. It's because this crap is still getting cleaned up. Once this crap gets cleaned up, then yeah, fire it up. Beam me up, Scotty, let's go. We're going past the moon. I'm so bullish on this space. Once we clean up this fraud, that is a blemish on the entire space. That's the problem. That's the big problem. Is that everybody from the outside looking in doesn't get to find real cryptos, doesn't get to find the adults in the room, like Ripple, that have been transparent, been doing the right thing, aren't dumping on their community. Meanwhile, these guys were just liquidating us left and right, taking our money. Continuing on here, folks, we have a few more points to get to. This is very important. Starting off here with a little bit of XRP technical analysis from our good friend Dark Defender. This is important, folks. We're at a very, very important level, crucial point in these markets. 2 weeks back, we discussed XRP completed the correction targeting 60 cents. XRP formed wave 1 hitting 5796 and bounced from the orange resistance from the daily time frame. The correction should be considered to Fibonacci support levels at 55, 52, and 50. It might not necessarily hit 50.85, but that is the final level at the moment. When I check the weekly frame, the correction will not last long, but a couple of days, which is good to proceed to the Fibonacci targets on the upside, 64, 66, and 76. As previously discussed, April is expected to be great for crypto and XRP. That's the halving. I was strolling Amsterdam today, gathered my energy, and shared this with you. Shot a photo where you can find it on the profile. Have a great Saturday with your loved ones. And so this was shared yesterday. We're going to take a look at that chart. Wave 2 takes us back down. A little buy the dip opportunity. Let me know in the comments down below. Are you going to be buying this dip if we go back to 55? Oh, wait, we already did. Are you going to buy the dip if we go back to 50? Let me know in the comments. And then what are you going to be doing when XRP goes up to about that 76 cent level? Okay. Then what are you going to be doing when XRP goes past $1? Uh-oh, we're having some fun. Let's continue getting it going, folks. Check out this one from former Ripple employee Sean McBride. My wife and I were discussing XRP and potential reasons why it hasn't exploded like it should. I used the analogy of having a Lamborghini, XRP in this case, but only being able to drive it on the road filled with potholes, current payments infrastructure. Rebuilding an archaic global payments financial infrastructure doesn't happen overnight, but when it happens, expect that Lamborghini to have a nice, fresh, smooth surface to burn rubber all over Gary Gensler's face, jerk. That's funny. I would argue that this is a system that's being created in parallel. What I mean by that is we're not necessarily filling back in the potholes, but what we're doing is we're building a parallel road right next door that's going to be absolutely smooth and perfect. And at some point in time, right, you're going to have these off ramps, and some of the traditional financial system, some of the traditional markets have already taken that exit onto the new road, onto the smooth pavement, and they've maybe started hopping into a Lamborghini XRP that's rip-roaring down the road. While others are still driving down the old road with the potholes having to go a little bit slower. It's still clunky. There's still 5% error rate, right? This is the traditional system. And so you're going to have many points to off-ramp onto the new system. And the early adopters always benefit the most. Obviously, you take on a little bit more risk, right? But with that risk becomes the upside opportunity reward that we're all seeking. And so we're already got our Lamborghini. It's already moving. Use the analogy of the train, right? We're already on the train. It's already a cooking. We're loaded up to keep this sucker rolling all day, all night long. And we're still able to pull people on board for the time being. You can let your family and friends know, hey, this crypto thing's kind of interesting. If you haven't invested yet, we're looking at, some prices that even if you purchase today, we still see significant upside, but there might be a potential pullback, little correction coming here soon. So you could buy some now, you could buy some later. It's called dollar cost averaging. And with a simple conversation like that, you can get folks into a life-changing opportunity, in my humble opinion. And when I talk about a life-changing opportunity, I'm talking about simple 5 and 10x returns. I'm not talking about going to 10,000 XRP. I'm talking about you buy XRP at 55 cents and it goes to $5 and you catch a 10x. Do you see how conservative you can stay with your XRP price predictions and still have a life-changing opportunity? Where else are you getting a 10x in these markets? It's very simple. And, as I've stated in my thesis here on where we're at, we break, the system cracks, bank crisis continues, bomb goes off, whatever the issue is going to be. A new flu season happens. Maybe it's all happening simultaneously. It looks to me like it is every time I flip on the news. Response. Okay, we crash, and the response is going to be open back up Pal's Pandora's box. Cut interest rates, turn on money printer, forgive student loan debt, forgive this debt, forgive that debt, moratorium, nobody has to pay again. We'll see what level and extent they go to with that, but this is where they cut the rates. That brief shock in the markets is going to kill a lot of people, but then from there, we turn back on that money printer and we go back into a risk-on environment, which is why I don't care to be in an S&P 500 index of the stock market that's held up by 7 stocks. There is no breadth. There is no value extended out through the index. It's all at the top. And that index is only going to give me exposure to the upside of maybe 20%, maybe give it another 50%. Let's get crazy. The S&P 500 is going to go up 20, 30, 50%. Okay, cool. In that environment, what does crypto do? What does Bitcoin do? Even Bitcoin would give you a better return than that. I'm not a fan of Bitcoin. I don't own any Bitcoin, but I'd rather own Bitcoin than an S&P, because the point remains, if you go to a risk-on environment, if you go back to a Pal's Pandora's box opened up party, we all go back to having a good time and we pump it. Well, I want to be in crypto, which is going to well outperform the traditional market. And that traditional market still has really significant downside potential. Go look at all the previous crashes. It's just a question of is it going to crash 30% or 50%? Somewhere in between, or maybe even more. That's your options right now, as far as I see it. Traditional stocks versus cryptocurrency. You have 50% downside, risk on crypto, but you have a 1,000% upside. It can't be matched. Now, let's take a deep breath. Let's get ourselves calmed down before I talk about this next portion. Let me take a sip of my water. It's still only about a little after 1 p.m. here on the West Coast. So we're still sipping water, okay? If it's 5 o'clock somewhere and you're sipping an adult beverage, that's good. You might need it because the FUD has been heavy. The attacks have been relentless. But unfortunately for them, we have the facts on our side, and we're going to continue to provide clarity for our community. And we know exactly why they choose to spread FUD, and they spin up these narratives and they tell these stories. And it's simply to garnish attention. It's simply because they have the desire to get attention from you. And in some cases, they have something else to sell you. And they are what we call the little crypto bro shills. We have many of those. And then we have a whole campaign that we've seen for years to provide misinformation and disinformation about XRP. Now, let's cut right to the facts. Let's cut right to the definition from David Schwartz himself. Don't take it from me, take it from David. We stopped programmatic sales of XRP. As I highlighted in my video yesterday, they paused in Q3 of 2019. They didn't pick up ever since. They have not sold programmatically to exchanges since 2019 Q3. That's when they stopped. Okay, so when I put out the video earlier this week saying they let XRP breathe, that was a direct quote, and it was about a conversation. It was a conversation between the Ripple team, Brad and the team, and the market maker GSR. And this was back when they were doing programmatic sales of XRP. XRP had already started a significant pump, massive pump, from pennies all the way up to 80 cents. At that point in time, the team from Ripple said, let's let XRP breathe, and they stopped doing programmatic sales. Over the next 2 weeks, XRP went to an all-time high. In my opinion, that is not manipulation with harmful or devious intent. What the fact of the matter remains is that Ripple just has a lot of XRP. And to distribute it, they have continued to show that they're trying to have as little impact on the price of XRP as possible. In fact, when XRP has good news, we would historically see it sell off for whatever. This is something that always baffled the XRP community, right? Is why is XRP selling off on good news? Well, what we've seen is that Ripple actually stopped these programmatic sales back in 2019. So they are not happening at all, period, full stop. And that's very important to understand. They are only exclusively selling to on-demand liquidity institutional partners. Now, today, David Schwartz responded because everybody's been lighting up Brad and David and team at Ripple. Oh, when are you going to let XRP breathe? They're not even selling programmatically anymore. So anybody saying, oh, why doesn't Ripple let XRP breathe? They don't understand how this works. Period, full stop. And the problem is they've probably been listening to some morons out here that just flap their lips and mostly say nothing other than spin up nonsense and confusion. Let's go to David Schwartz himself. Can you provide more detailed definitions of programmatic and in connection with ODL? David says, sure. Programmatic sales are sales that take place on exchanges, generally by market making with a slight net bias towards reducing the amount you hold. Effectively, you sell an asset by helping other people both buy and sell that asset, but on net, you sell more than you buy. Sales in connection with ODL, which is what they've been doing exclusively since 2019, sales in connection with ODL occur when someone wants to make a payment somewhere using Ripple payments. For example, say someone wants to send Mexican pesos. One way they can do this is by buying XRP from Ripple at the moment they need to make the payment. Send the XRP to a Mexican exchange XRP for Mexican pesos, and then use a payment provider to make a Mexican domestic payment to the recipient. If Ripple buys back fewer XRP than sold in that payment, then that is a net sale in connection with ODL. This is why it's really important for us to watch the net sales. The net sales lets you know how much XRP is actually released out to exchanges, to market makers, to institutions, okay? And that's the number that's actually being released. Many people see that 1 billion XRP is being released to Ripple every month. Okay, well, what they've been doing for the past few years is they return about 700 to 800 million of that back to escrow, which time locks it once again. And right now with about 40 to 42 billion XRP in escrow, it would take 42 months to go through all of that XRP if they dumped it all. But see, they keep on returning it back. So every time they return it back, they're adding another month onto the escrow releases. And so what people don't understand this. If Ripple didn't believe in XRP, if they didn't think it would be important to have it on their balance sheet, they would not be locking it back up in escrow for 42 months. They would be selling it right now. Or if they didn't want to sell it right away, they would at least keep it outside of the escrow in their cold storage wallets or whatever if they have for custody solutions. And I'm not going to make any joke about Chris Larson's wallet getting compromised, but whatever custody solution, that was not Ripple wallets, by the way, that was Chris Larson's, but now would have been a good time for a joke about that. But they obviously have custody solutions that they're putting in progress with Medico, and then the acquisition of Standard Custody and Trust, which is just a massive deal, by the way. But if they didn't care about XRP, if they didn't believe in XRP, if XRP wasn't the heartbeat of Ripple, and if they didn't believe in the future price of XRP being higher than it is today, they would keep the XRP outside of escrow. They would keep it in their wallets that they would be able to sell at any time they wanted to, but they're not. They're returning 70 to 80% of it back into the escrow. That time locks it again, and it puts it back out about 42 months because they have 42 billion XRP. They get $1 billion every month. But at their current run rate or distribution rate, I guess is what we could call it, they're barely letting any XRP out. I mean, they're letting out some. You're seeing a few hundred million, I believe, was the net sales from last quarter. Few hundred million on a coin that had 600 million in volume daily. So about half of the daily volume, one daily volume, is what they're releasing on a quarterly basis every 3 months. See, this puts it into perspective. And when you look at the contracts that they had with these market makers, it was very specific. It had to be under 1% of that current daily volume is all they were allowed to ever sell or buy, because they didn't want to make huge fluctuations. They wanted to be responsible custodians of the world reserve currency, XRP. And this is so great that we're seeing the truth come out in regards to this. Once again, this is why I had to cover it earlier this week. This email exchange came across my desk and I said, what the heck? How did I miss this from before? Because I remember reading through, documents that were related to this, but I just had never seen that specific email that said, let XRP breathe. And so that's why I was like, okay, I got to talk about this. I waited 1 week to put together my thoughts, compose myself, because I didn't want to. I knew this thing was going to go nuts, and sure enough, it did. And I continue to try to cut through any sort of narratives, cut through any sort of hype. Do I get excited? Very clearly, very clearly. Everybody knows, and everybody would consider that I am biased. And I put it all out there for everybody to see. I wear it on my sleeve. I tell you that I treat my XRP like a reserve currency of the new financial system. I am guilty of doing so. I don't hide that fact. But then every time we get information, I feel like we got to present it, and we got to present it in a way that cuts through the over-sensational narratives that get spread. And this is XRP to the moon, and this is XRP FUD. We want to cut right in the middle of that and provide clarity, reason, common sense. And, I'll be honest, though, it does get me excited. The way that they're handling this gets me very excited. If they were like all these other crypto projects, we wouldn't know what the distribution model was going to be whenever they felt like it. They just dump. We would have no program. Man, no one else puts their tokens in escrow like Ripple's done. I haven't found anybody else that's done that, right? Now, when you look at projects like Bitcoin continuously has to find buyers for those miners, otherwise the miners shut down. It's one of the problems with proof of work is the selling pressure that those miners are always putting out. Now, assuming that there's always more, then it's going to be fine. But this is where you've seen in the last couple of bear markets, Bitcoin gets to a point where miners have to start shutting down. That's a problem. Otherwise, you compare that with the XRP ledger, the best incentive is no incentive. The ledger just keeps running because you have people that have reasoning to want to see the network go forward without getting paid directly from the network itself. They have a business around it. They have a business on the XRPL. Or they just believe in the XRPL and believe in XRP. And what we're starting to see now is we've seen so much revealed in this SEC versus Ripple lawsuit. It's given us so much insight into their business model, how they are making so much money. And this is what the haters just can't stand. They can't stand to see Ripple winning so big. Guys, I'm not paid by Ripple. It's just facts. They're sitting on $1 billion cash. They're sitting on 25 billion worth of XRP. It's a really good spot to be in. And they're being responsible. It's so important to understand. And so I'm hoping that we get to see a little bit more because we have the financial statements that are being given to the SEC. Remember, right, the SEC just made a request to the judge. We want the financial statements for 2022 and 2023. And then we also want all of the ODL contracts to institutions, which is what we just talked about, right? This is all that they've been doing since the lawsuit started. The SEC now gets to see all of those with the financial statements, and they get to see basically the proceeds, how much they made from it as well. This is where it's going to come down to the judge ruling whether or not those sales were investment contracts as well, or if Ripple was able to effectively change their contract for ODL sales, and those are good to go. If the judge rules that those are investment contracts, you're talking about billions. There's a video I put out over a month ago talking about 3 billion being on the line for Ripple. When this was starting to go back and forth, I put out the video talking about how Ripple has about 3 billion on the line because right now you're talking 700 million worth of institutional sales and ODL sales that they could be in trouble for. The original amount was 1.3 billion. Now it's down to 700 million because Judge Torres did not distinguish between ODL sales to institutions and just straight sales to institutions. She lumped them all together. That's 700 million. Okay. And if the judge rules that these post-complaint ODL sales were investment contracts, you're talking about another 3 billion at least that Ripple has conducted since the lawsuit that would be added on. And so the SEC would be able to say, Your Honor, we're not talking about 700 million that Ripple made. We're talking about billions. Please kill them. Please burn them at the stake. Obviously, the SEC wouldn't say that, but sometimes it feels like that's what they're trying to do to good companies that are just trying to build a business and do the right thing. You guys know that deal. And we're about to expose that wide open with this documentary. As I just reported a couple days ago, we have Stephen Narioff, the Ethereum whistleblower, coming in, and we have our good friend, digital asset investor, coming in as well. And I wanted to share this one with you guys. He retweeted out this post today, and I thought that this post hit so perfectly to tie this together. In conclusion, all of the conversation about Ripple, programmatic sales have stopped. They've only been doing ODL sales. How are they distributing XRP? People like me say they're doing it responsibly in an effective way to grow the XRP Ledger ecosystem. Haters say a bunch of other crap, but look at this one here from 2020. This is from the Hodor blog. And by the way, we did just see Hodor make an appearance back on Twitter. He had gone missing for a couple years, and he now is back. He put together a historical blog on Ripple and XRP. It was really incredible to read this stuff back in the early days of XRP. But he said in this one, quote, Ripple is quite cognizant of possible market capitalization numbers, along with the public relations challenges that will go with it. Their plan is not to just sit on their XRP and watch as their valuation skyrockets past the valuation of the East India Company. What he's talking about is at one point, right, the East India Company was the most valuable company in the world. Then they dominated. They just dominated. Now what we're talking about here, and we've been talking about how Ripple very well could have one of the largest IPOs ever. I've made the case that they might be able to have the biggest IPO ever at 25.6 billion for Saudi Aramco. I would argue that Ripple might be worth more than them, and I've made the case because just their escrow alone is worth that much. So this gets very interesting. But as he's saying in this blog, as we've been saying as well, and as we're effectively seeing from the way Ripple's been distributing this, they're not just planning to sit on it all. They called themselves a lender of last resort. And as I said in my very first video that I ever made on TikTok 3 years ago, I said we should not consider Ripple to be an equivalent of a central bank. They're higher than a central bank. They're not just serving one country. They're servicing the whole world. Some call it the intergalactic world reserve currency, XRP. You know, if you believe in space, I guess maybe we'll be able to transmit value up in space too. But we're talking about an entity that's more comparable to the IMF, the BIS, the central bank of central banks, the XRP ledger, a settlement layer that can settle any form of value. And it really is going to help blossom this entire internet of value that we're going to see created over the next decade. But saying the same thing right here, they're not going to allow Ripple to become, right, the most valuable company by a long shot. And you know what's interesting now is we see these companies with trillion-dollar market caps like Amazon, Meta, Google, right? And then we have Nvidia and Microsoft. Microsoft, I think, just went to 3 trillion. Nvidia's worth more than the entire Chinese stock market. And, you know, I look at this XRP story. We're talking about Ripple being worth 20 to 30 billion at XRP prices at 50 cents. Do the math with XRP just at $5. See, we're all doing the math on how rich we're going to be when XRP goes to $5. Do the math on where Ripple stands when XRP goes to just $1, to $2, just to $5. You're talking about a valuation in the hundreds of billions. Now, that would be assuming that Ripple is going to hold on to this escrow and keep it for themselves. And it is important to note that they for generally accepted accounting practices, GAAP, they do not treat the XRP in escrow as an asset on their balance sheet that's denominated at anything other than 0. It's marked down at 0 on their balance sheet. And so this is part of the reason why Wall Street Wall Street's not even really, you know, there are some Wall Street investors in Ripple, but Ripple's not a public company yet. But I would argue this is why Ripple's valuation is being discounted on the private markets. One, because you have less liquidity, you always have a discount on the private markets, but also because folks don't know how to value the escrow. Folks don't understand the escrow. Folks don't understand how Ripple is treating their reserve, holdings of XRP. And I continue to make the case that they're acting as responsible custodians of the world reserve digital currency, and that we're seeing them distribute it in an effective way that has minimal impact on price. And this is what we want. This allows them to distribute XRP and decentralize the supply of XRP. We know that the XRP ledger in and of itself is decentralized, but the supply of XRP is not decentralized. The supply of XRP is definitely centralized, right? Everybody understands that, right? Ripple has about half of it. We want them to decentralize that supply in a way that they get paid to do. This is what I love to see. And, the fact that they have over-the-counter institutional buyers that don't impact the price negatively when they distribute this XRP, I love. It distributes XRP, it decentralizes the supply, and it puts cash in Ripple's pocket to allow them to continue to become a behemoth in the financial world, not just in the crypto space. They're ready to be on the same platform. I argue, please let me know in the comments down below. Do you think that Ripple is on the trajectory to becoming one of the top 10 companies in the world? I'm curious what you guys think. This isn't just their initial IPO, right? You look, these companies, they all IPO'd 10, 20 billion bucks. Those were really big IPOs, and we could definitely see Ripple do that, right? But what about, where we're going to see Ripple go over the next 5 to 10 years? Do you think that Ripple has the potential to find themselves in the top 10 companies in the world? Let me know in the comments down below what you guys think. This is very interesting to see the way that they have been distributing XRP, just little minimal amounts. And it begs the question, where is retail going to be able to get their XRP from if Ripple's not, they're only leaving a little bit left here and there. There's a little bit left over. They're leaving a little bit of crumbs left over that these exchanges can sell to us. Gets interesting very quickly, especially when we see the institutions pool up this liquidity and all the liquidity gets tied up in these liquidity pools. And we're going to be getting those liquidity pools with the AMM set to go live here in the next couple months. So we're starting to see this whole thing come together. It's an absolute beautiful thing to see. I just want to say a huge thank you to this community. All the support has been magnificent. If you guys could do me a big favor and smash the thumbs up on this video, share it out far and wide and let everyone know the truth about XRP. It's looking better than ever. I'm not here to give you financial advice, but I am here to provide you some community resources. They're all available at my website, zachrector.com. And just get in touch with us if you have any questions, any comments. We would be glad to help you guys out. Appreciate all the love and support, and I hope you guys have a great weekend. We will see you guys tomorrow in the next one. God bless.